Hello, hello. We should be live. Just getting the Crocs earnings report. Let's just switch to just me for a minute. Hello, hello. Okay. Exciting times. We just got on all. It's big earnings season time. So there's been lots of stuff to go through recently. And I am just pulling up the Crocs earnings report for us now. How are you guys? How you doing? By the way, link to the Discord in the description, and I'll be doing portfolio roast soon. Someone's already sent me theirs, so I'm just going to be pulling it up and going through it and giving my thoughts on the stocks that I see. So if you want to have your portfolio roasted, then please send it over to me and I'll check it out. Okay, so what else do we need here? Bada bing, bada boom. Got that up. I'm just going to check the live stream is working. I need to be talking into the microphone. Hopefully that's better. And just check out the channel. Cool. We seem to have audio. Yep, we do. Great. Awesome. I'm just going to get a cup of water. Be back in a second. Put that under the mic to prevent any audio issues. Okay, cool. Let me share my screen. And here we are. And here is the Crocs Q3 2023 investor presentation. Right, let's just get straight into it. There's not too much to discuss here. Almost all the important information. I almost never read the forward-looking statement. This document includes estimates, projections, and statements relating to our business plans, commitments. Yeah, so just boring. These statements include, but are not limited to, yes, basic. So Q3 highlights, Q3 financial review, and appendix. So I've already gone through this last night. We delivered a strong third quarter, exceeding the high end of our guidance, led by double-digit revenue growth in our Crocs brand, supported by healthy full-price selling and industry-leading operating margins. Both our brands gained share during back-to-school season. During the quarter, we took decisive action around 𝗲𝗂𝗀𝗏 to accelerate our marketplace management strategy to ensure long-term brand health. As such, we are adjusting our full year outlook to reflect this shift. And so this is the main slide, and I've gone through the whole presentation, and almost all the important information is on this slide. Revenues are up 6% for across the whole business. Crocs brand revenues are up 11%. Yeah, I mean, it's nice to have the extra 𝗲𝗂𝗀𝗏𝗏's revenue, but Crocs is the really best bit of this business at the minute. Next, there's margin. The cool thing is margin hasn't slipped while they've been getting up their revenues. That's always a big issue. And adjusted operating margin is up plus 40 basis points. So not very much, but significant. And adjusted diluted earnings per share is up 9%, which is pretty great. And then debt pay down of 90 million and repurchase of 150 million. So what's that in total? That's 240 million in sort of returning value to shareholders, but in a more subtle way. You know, obviously it's not dividends. And then gross leverage was at 1.7x at the end of the quarter. And that long-term goal is to get that down to 1. And they've gotten that down significantly already. I think it was like at 3x or something when they initially purchased 𝗲𝗂𝗀𝗏𝗏. So yeah, everything seems to be going in the right direction. I've got a rising interest rate environment, so I don't expect any of the companies I'm holding to be like smashing their earnings at this particular time in the economic cycle, and I don't expect that to happen for another year. But so long as revenues are going up, I don't mind that. I don't mind them not beating projections. I also want them to be setting ambitious projections, ambitious goals. I don't necessarily want to be hitting those goals. I want to be getting close to them. because then if you are hitting your goals constantly, then perhaps you're not setting them high enough. So, right. Let's just go through the rest of the presentation. That's all the important stuff. And I can take you to the end of the presentation where I can show you, let me go to the end of the presentation, and then we'll go all the way through this. This is, so their total revenue growth, their prior guidance at the beginning of the year was that they'd be hitting 12.5 to 14.5 at the end of the year. And they've adjusted that to 10 to 11% growth for the whole year. And so then revenue growth is still, total revenue growth, and then Crocs revenue growth is on target, and it's the 𝗖𝗂𝘀𝘁𝗺𝗏 revenue growth, which is always going to be hard to predict, but yes, that's quite disappointing. It was going to be 14 to 18%, and now they're adjusting it to 4 to 6%. Pro forma revenue growth, yes, is what it is. Then adjusted one-time costs, that's just stuff that we'd have to do tons of digging in order to find out what that is. And then, but it's very, very small and insignificant. And then adjusted diluted earnings per share, the prior guidance was 11.83 to 12.22. I mean, and it's not come down that much. So 11.55 to 11.85. So just about either down 30p from the low estimate, and it's down 40p from the high estimate. But yeah, I mean, still very happy with $11 per share for a stock that's this cheap. And then capital expenditures that's one of the things that I think is quite interesting, is capital expenditure prior guidance is going to cost them 165 million to 180 million to run the business, and now that's gone down to 125 million to 135 million. That's what I like about this business, is that the capital expenditures are so low. And you know, so they got the capital expenditures that are going to be hitting around 200, let's just say 235, and then at the minute they are paying debt off at a rate of 90 million and 150 million. One of the reasons that they're not paying off more debt is because they are rightly buying back shares while they're cheap. So let's go back to the top slide, and then let's go through the presentation. $150 million of share buybacks. And so that's not a crazy amount. Like the business is valued at about 6 billion, I think, at the minute. And so let's just get the share price. And then do we have the market cap here? Market cap 5 billion. But that's just in one quarter. So yeah, I'm very happy with the fact that we've got boosted revenues. If you adjusted those revenues, that earnings per share, which I'm guessing that the earnings per share is adjusted, then we're doing well. Okay. So the Echo, Mega, and Siren, I'm not sure I care for these existing. The Echo is kind of cool. But yeah, whatever, they're trendy. And so long as influencers are buying them, these are absolutely ridiculous, but I guess that's the point of the brand. It's not for me to comment on the style of Crocs. I just like the classic clog. I wear them all the time. Asia Pacific revenues. So Asia is booming, by the way. And I haven't mentioned that yet. Asia is absolutely soaring. So one of the things that is going well is Crocs are definitely penetrating China hard. In Asia, growth was broad-based with strong brand momentum throughout the region, including Australia, China, South Korea, and Southeast Asia. China revenues grew over 90% in the third quarter. And I have actually been to all these countries. And so I went to Vietnam, Cambodia, Singapore, Australia, and New Zealand. And I can tell you that Crocs are in every single one of these countries, and every single street you go down, there is at least one person wearing Crocs. I do not doubt this whatsoever. That is why I keep buying more shares, because Crocs are becoming an international brand that people just love. And Asia are not the sort of penny-pinched countries. It's not the penny-pinched country that it used to be. They absolutely have money to spend on extra nice things like Crocs. Okay. So, yeah, they are hitting Asia hard. They're doing a really good job. They've got Crocs stores in Asia, and people seem to be buying them. And they love the gibbets as well. It's a very sort of... I'm surprised that it didn't come from China, to be honest. It feels like such a Chinese brand, Asian brand, because of the way that they've marketed themselves. Feng Chengwang, Crocs 𝗂𝗂𝗂𝗧 𝗂𝘂𝘀𝘀. Crocs has a passionate fan base with 60 million uses of the hashtag, meaning clogs followers on Reddit. I don't know what Red is. Big brand day. Siren Clog sold out in its first day. Siren Clog sold out in its first day as height resonated with the consumers. Interesting. They liked having a little extra height on the shoe, and Crocs have picked up on that, and they're obviously going crazy for it. Yeah, sold out on the first day. This shouldn't be too surprising to people that have been invested in Crocs for a while. They like to, ever since the new CEO from 2017, what he's done with the brand is he's restricted how much stock there is at all given times, so that there is a constant high demand for the shoes, because he actually wants to sell out. He wants to run out of stock. And there are numerous benefits for this, but the biggest is that you get to have higher margins year round. So the brand before 2017, a lot of people think, oh, Crocs just got big during the pandemic. No, Crocs got big when they stopped selling the shoes cheap. And what is created is this cheap, ugly clog has an aura about it of being the best, the high quality clog, because no one can buy them cheap. And that we'll get into that in a future slide in this presentation, how committed they are to making sure that their shoes are not being picked up cheap on the black market. Wally Socks Micro Black. This is the thing. I don't really understand the HEYDUDE brand. That's the only bit I don't understand about the business. But so long as it makes money, I'm okay. And I do trust them I do trust that there are people that like them, and that they will be able to generate more demand for these shoes, because I have faith in the CEO. And recent HEYDUDE marketing wins. So pretty genius. They partnered up with 𝗂𝗂𝗂𝗏. This is the Crocs marketing team are clever. HEYDUDE, 𝗂𝗂𝗂𝗏. Back to campus. I think they can become like this sort of campus shoe, comfy footwear. I don't know. I really don't know. But if anyone can do it, they can. Brand awareness up to 32% from 18% in 5 months. That's one of those sort of just bullshit stats. HEYDUDE ranked number 7 favorite footwear brand. Okay. Mind share up in underpenetrated markets. Okay. Strategic wholesale account update. Q3 2022. Strategic. Year-on-year strategic sellout. Okay. Progress account rationalization. Expected cleaner account base to begin 2024, having curtailed over 50% non-strategic accounts in 2023. By the way, if you've got any questions, put them in the comment section and I will answer them. Okay. Pulled back on digital rights for accounts that fall outside or our strategic alliance. Q3 2023 financial highlights. Revenues. This is the exciting bit. So yeah, across the business up 6%. Gross margin 55. So by the way, it's up 6% plus share buybacks. So you get a higher earning per share for that 6%. So the earnings per share, the revenues per share are up more than 6%. I wish that would be a good thing for them to include. So you got diluted earnings per share 6%, but once you consider the share buybacks, you're up 9%. There you go. You got it at the bottom right there. How nice is that? So gross margin 55%, 70 basis points. Adjusted gross margin, 57%, 230 basis points. Adjusted operating margin. I mean, they have the highest operating margin in the shoe business because they have such a basic, incredible product. Brand, 75% Crocs, 25% 𝗖𝗂𝘀𝘀𝘁. Geography, North America is still the biggest buyer, but that is going to be changing rapidly. Channel, direct to consumer is where you get the highest margins, but then wholesale is where you get the highest distribution. So revenue, driver growth rates, pairs. This is what I thought was interesting. So decline driven largely by curtailment of significant African distributor believed to be delivering goods to the US grey market. So this is what I think is driving the loss in earnings on 𝗖𝗂𝘀𝘀𝘁. So basically what I think has happened is they've realized that there is an African distributor that is selling 𝗖𝗂𝘀𝘀𝘁 cheap on the grey market somehow. And so it's not that they are doing anything strictly illegal, but they've stopped this distributor selling shoes. And then that stops other retailers getting them cheap and then selling them cheaper. And so what will happen is this will be very good for their brand image long term, that these shoes will no longer be on the grey market being sold to distributors cheap. At least that's what I get from this. And I think that it'll be interesting to see what the impact of this is, but it just shows a commitment to not allowing anyone to water down the brand, get crap products out there and stuff like that. Basically, if you have a distributor doing something like this, they're probably not going to be giving out the best shoes and of the highest quality either. So yeah, it's a good indication that they're not just being money grabby. Previous CEOs, I think, would probably have just allowed for this because they're getting extra revenue and that's all they care about. But Crocs are very good at not being cheap, and the current CEO is good at not being cheap and making sure that they think more long-term about the overall brand perception. So, Asia Pacific, North America, EMEALA. So, yeah, cool. Revenues, 247 million. So this is the growth. Wholesale is down. Growth on a constant currency basis, which is a non-GAAP financial measure. See further details in appendix. Year on year, digital growth, digital penetration, 55% and 41.6%. So that was 2022 and that's 2023. Okay. Adjusted gross margins based by brand. So this is why I think the African distributor fucked up the margins on 𝗖𝗂𝘀𝘀𝘁𝗀𝘀𝑠, but I do not know that for sure. But yeah, 𝗖𝗂𝘀𝘀𝘀𝑠 has lost margin over the last quarter, which from the same time last year, which is interesting. I don't really understand why that's happened. I trust the current business, the CEO and everyone to fix that going forward. Just something to watch out for. I think that this is just a blip. So Crocs has gone and gained margin. That's what I think is this is why I trust them, because when you look at the Crocs brand, look at that, 57. I can't believe they've managed to get more margin out of Crocs. That is absolutely incredible. And this is obviously the impact of that loss of gross margin, operating margins. Best in class. They are hands down the best margin footwear brand in the world. And it's funny to me that they still have such a low PE, because margin should be the main impacting factor for a price to earnings ratio. So yeah, they've done really, really well. And yeah, it's just that 𝗖𝗂𝘀𝘀𝘀𝘁 brand, but I think that is going to get fixed up in the next few quarters. As you can see, gross leverage ratio is coming down, but I think as their share price is low, they are prioritizing share buybacks, because if you buy back shares, you have more money in order to pay off debt anyway, and their debt, I believe, is still cheap debt back from the pandemic when interest rates were at rock bottom lows. So, and their long-term goal is to sit at 1x leverage. And the reason that they will sit at 1x leverage, a lot of people don't really understand leverage. the assets that they have generate so much cash. You really do not need much asset to generate tons and tons of cash. So realistically, they won't actually have that much debt relative to their business and their earning power, but because all their stock of clogs is really cheap, then on the balance sheet it will look like they have high leverage. But really, it's just one of those sort of accounting glitches that debt isn't often done in proportion to earnings power. It's done in proportion to assets. And so Crocs, part of why they have a good brand image is that they have a low amount of stock. And so they will, long term, they're going to have 1 to 1.5 leverage. So they are 0.2 leverage away from being at their long-term goal. Right, inventory balance is down, and this is part of them trying to improve the brand image across the business. The main one that they're down on is Hey Dudes. They've dropped about 50 million in inventory. That will again drive up the brand perception. I don't know if you can hear the builders in the other room. They've dropped the amount of Crocs that they have also. It's potential that maybe sales have slumped a little bit at the end of the quarter, and so that's why they've done that. God knows. But basically, it's just part of their long-term drive to have as little inventory as possible. And so that's their assets there, $390 million in assets. But when they make $2 billion a year, they will still have, let's say they have 400 million in debt, then that's like one leverage. So that's why leverage looks bigger than it is for a business like Crocs, when actually in some ways you should be doing leverage relative to a company's earnings. So this is where we go to the final slide, and you can just see their year-on-year revenue. They expect total revenue to be 4 billion roughly. So let's just say it's 3.9. That means the business is trading at like 1.2% or 1.2 times revenue, which I think is insane. I just can't believe how cheap this business is and how low the capital expenditures are. Does it say how much debt they have on here? It'd be interesting to just put that into context. I'm just going to go onto the website that I like looking at for things like debt. So this is one of those things where the debt to equity looks high, but they have such high earnings relative to their debt. They have absolutely the ability to pay off. I can go on to Simply Wall Street because that will illustrate it better than this, and it will show how well that they have been paying off debt. I'm going to end the call soon because I'll be doing a call about 𝗏𝗏𝗏 Discovery next, who have also released their earnings. I actually haven't looked at, so I need to have a look at the earnings before the call. But I looked at Crocs last night because they released them during the day. So let me just bring this over to here. Okay, so we are looking at the balance sheet and we want to see like long-term debt. And you can see long-term debt, 2 billion. Wagwan. So it was at like 2.85 billion at the peak, and now it's gradually gone down to around 2 billion. And let's just scroll down to here. Let's see, is that a trailing 12 months or is that's the end of the year at 2022? We had long-term debt at 2 points, so they paid off like 300 million. They still have 2 billion in long-term debt, but they absolutely have the capacity to pay that off. And then they've also, so I wonder when they update this. So they've released their earnings report, they've released their initial report, but then you can see it takes a little bit of time for them. This is their 10Qs, and it should say, oh, this is November. That is November. So they've put the data in here, but it doesn't seem to have updated on here. Because that says 6:30, and it should say 9:30. Anyway, not interesting. But they have around 2 billion in debt, and let's just look at their cash flow. They'll have less than 2 billion of debt now. And they'll have share buybacks here. cash from investing, net income starting line, 669 million. So yeah, really amazing net income. Oh, that's the trailing 12 months to be fair. But yeah, around 200 million net income starting line. Yes, so I am still super bullish on Crocs, and that's all from me. And I'll be back for another live stream. Ooh, just checking if there's any questions. No questions. One watching now, that's probably me. Okay. Right, guys. If you do want to join me for the Warner Brothers Discovery Call, it will be in around 40 minutes. So, just link to the Warner Brothers Discovery thing on the YouTube. Thank you very much. Goodbye.